Trade wars and tariffs have become battlefields for economic influence. As global competition intensifies, can the Federal Reserve shield America from the turbulence of unfair trade? In this episode, I explore how monetary policy shapes and is shaped by the frictions of global commerce. The US dollar, the world's favorite currency, can be both the country's greatest strength and its toughest challenge. A strong dollar means cheap imports, but it also harms American exporters. When tariffs hit, prices rise, supply chains stall, and market uncertainty grows. Tariffs intended to shield American businesses can backfire, raising costs and triggering retaliation. When this happens, the Fed often steps in, using interest rate cuts or liquidity tools to soften the blow. But every Fed move is scrutinized. Am I protecting Main Street or fueling Wall Street? Foreign central banks sometimes push their currencies lower to give exports an edge, sparking accusations of currency manipulation. America's unique position as the dollar's gatekeeper adds new pressure. Should the Fed let the dollar rise or act to balance global shocks? The Fed's toolkit, rate changes, bond buying, dollar swaps, can ease pain, but they can't fix every problem. Monetary policy isn't designed to solve trade disputes, but in every global dust-up, the world looks to the Fed for reassurance. When trade tensions escalate, someone wins, someone loses. For every job protected, another may be put at risk. The Federal Reserve must balance national growth, global stability, and the unpredictable fallout of policy choices far beyond its own building. For decades, countries around the world have imposed steep tariffs on American goods, limiting U.S. exports, while often facing little or no equivalent barriers for their own products entering the American market. This imbalance has fueled long-standing frustration in U.S. industry and government, raising questions of fairness, competitiveness, and America's willingness to absorb global costs for the sake of free trade. In recent years, the White House, particularly under the Trump administration, took a more aggressive stance, insisting on reciprocal tariffs to level the playing field. These moves, controversial at home and abroad, aim to force trading partners to treat American exports fairly. Supporters say this strategy finally acknowledged and responded to decades of trade imbalance. Critics argue it risked escalation and new disruptions. Nevertheless, the message was clear. The United States was seeking a new deal, one rooted in fairness and mutual respect. Trade and money, politics and policy, each move shapes the world's economy. In the turbulent clash between tariffs and monetary policy, America's prosperity hinges not just on global deals, but on the steady hand of its central bank. Globally connected, domestically challenged, the Fed in the era of trade wars, Gap Fives.